So we're filming this on Monday, and by noontime, almost all of Houston will be shut down celebrating the Astros win in the World Series. We want to congratulate the Houston Astros, Dusty Baker, and all the fans here in Houston, and want to thank MLB, Major League Baseball, Philadelphia Phillies, New York Yankees, and the Seattle Mariners for giving us a great couple of weeks of competition. In a much anticipated move last week, the Federal Reserve raised short-term interest rates to a target range of 3.75% to 4%. While this move was expected, interest rate moves are almost always news for your money. I'm Chris Parrish, Chief Investment Officer with Oak Harvest Financial Group here in Houston, Texas. And this is our investment team's midweek release when we examine a news item, headline, or story making the rounds from publicly available sources, and we ask, is it news or is it noise for your money? Before we move on to discuss last week's Federal Reserve meeting, its rate increase, and trying to read between the lines, please make sure to hit the subscribe button and tap the notification bell so you'll be notified when we release our latest content. Viewers, Federal Reserve moves are almost always news for you, your family, and your money. As it has been all year, markets were once again whipsawed on the day of the Federal Reserve's rate increase. Why? Because the release comes in two parts. First, there's the written committee statement. And then about 15 minutes later, that's when Chairman Jerome Powell's comments and questions and answers started. So the markets initially reacted positively, rallying to 3,900 on the S&P 500 on the committee statement, which read more dovish. The dovish change was this. The Fed discussed factors that would influence policy going forward. They said the committee would take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. So what does all that mean? That's code for we'll be forward-looking and anticipatory. We know a slowdown in the economy is coming. So this was taken as bullish from the markets at first. The Fed saying that a slowdown in the pace of future hikes is coming, that's bullish. They alluded to future rate hikes being smaller than the last 4 consecutive 0.75 percentage point rate increases. Okay, so then Jerome Powell started talking and started answering questions and answers. And the S&P 500 dropped to 3760 in a straight line over the last 60 minutes of trading as the computers took over trading with no other markets open in the world. Okay, so what did he say that markets didn't like? Well, he alluded to this likely being the beginning of the slowdown in rate increases. He said that the incoming data since the last meeting suggests the ultimate level of interest rates will be higher than previously expected, meaning that the terminal rate for interest rates might need to get closer to 5% than the previously thought 4.5%. From Jerome Powell's comments, you would conclude the Fed looks like they want to take out some insurance just in case. Powell said it was premature to think about pausing interest rate increases, that they weren't going to pause anytime soon. That seems pretty clear-cut, yes? Well, it's not exactly to me. Why? Because I want to take you back exactly a year ago, to November 2nd and 3rd, 2021. I want to take you back to the Fed meeting back then, followed by the November 23rd release in 2021 of the Fed minutes, which also happened to be almost the exact top in price and time for the S&P 500. Yes, we did make slightly higher highs at the end of the year for 3 to 5 days on markups by other portfolio managers and some stuff that happens. I have a link to the description below of a CNBC article of the Federal Reserve Committee, the November 2021 meeting minutes a year ago. If you click on that link, you'll see exactly a year ago the dynamic and concerns of the Fed committee and with Jerome Powell were exactly 100 degrees opposite from today. Back then, the minutes showed members were concerned about inflation and they were willing to increase policy should inflation run hot. The minutes showed officials would be willing to raise interest rates sooner, faster, and higher than currently anticipated. And what did Jerome Powell's speech emphasize back in November of 2021? He emphasized employment and only employment. He had almost zero concern about inflation. His almost entire focus was employment and jobs. While the committee was concerned about inflation, he had very little concern about inflation. That's exactly 180 degrees opposite from today. Today, Mr. Powell is 100% all in tack inflation, while the committee in the background, who was right in November of 2021, is saying, whoa, Jerome, slow down. We have a dual mandate, and the other factor we're responsible for is about to hit the wall. They're saying we're nearer to the end of the rate cycle, not the beginning, and we're going to be going materially slower soon. That would be a good thing for stocks, bonds, and your money in 2023. So viewers, I ask you, whom should we believe about the future? The future in the economy and future Fed moves in 2023? The committee in the background, who was correct in November of 2021? Or do you want to believe Jerome Powell, who was out front and was dead wrong last year? Are you trying to meet your needs or your greeds in retirement? Give us a call here and schedule an initial consultation with an Oak Harvest advisor. We'll sit down with you and help you and your family do the math to figure out if you'll be able to meet your retirement goals and needs. At Oak Harvest, we think our clients are best served by us helping them plan for their future needs instead of focusing on the past. The future in the markets is always uncertain. That's why our advisors and retirement planning teams plan for your retirement needs first and your greed second. Give us a call here to speak to an advisor and let us help you craft a financial plan that helps you meet your retirement goals. Call us here at 877-896-0040 and schedule an advisor consultation. We're here to help you on your financial journey into and through your retirement years. I'm Chris Paris, and from everyone here at Oak Harvest, have a blessed week and congratulations, Astros.